Fantastic. We'll get it recorded and we'll get started here today, and then we'll jump in as we can. Got a bunch of things we want to cover while we're here today. So we'll give you a little bit of an overview of what we do here. So two groups here today. Normally we do this with our Income Navigators group, and that is our service that myself, Igor, Gabe, others here contribute to. So welcome to all of the standard Income Navigator folks from that service. I thought this would be just a good way to give you an overview of what I'm looking at, a little bit of a overview of what we do here, and where I think maybe the markets and some of the things are heading. I'm going to start as I always do here, and I'm going to jump into really just talking about the markets briefly, and having a lovely down day today in the market, which is not terribly down, but it's all good. Let's just take a look at some of the indexes that we have. You can see too that the amount of stocks in the S&P that are over their 50-day moving average, they've dropped to about 24%. So we're not at an extreme level as well as we were back in June when we really hit the zero mark, but we're slowly getting there. Over the last couple sessions, we're really dropping down. So I'll explain some of these indicators to you. I'll explain a little bit of what I'm looking at. Hopefully it gives you some insight as to what I'm doing as we go through it. Just want to hit on the dollar here, so you can see on the U.S. dollar heading back to new highs here, came back down, bounced, and heading back up a little higher. So that's not a great sign for what we're doing typically as the dollar is reaching new highs, but just something to keep an eye on. And I will get to some of these indicators in just a moment. Something we're always looking at too here on the UVXY index gives us a chance to see where we are in relative terms to the 8 and 21 moving averages. So the 8 is the teal line here, and the 21 moving average, exponential moving average, is this green line. UVXY is above those. As UVXY is above those lines, typically we're in a bearish situation. So we've been there for 4 days, pretty much corresponds to the indexes. And as long as we really remain above these 8 and 21s here, then I think we expect to stay in a bearish mode on the indexes. VIX up today. I was above 28 at one point. It's combed back down to 27. You know, there's a little bit of, I don't think there's really panic in the air today, but you got some big sell-offs the last couple of days and everybody wondering where we're going. VIX is still not at an extreme level. It's elevated, but it is nowhere near extreme. I think at some point that's coming. So do I think we're going to hit a VIX 50 or more? I think at some point we will. But right now, we're elevated, which means anything can happen, and typically does happen. You got a lot of volatility on the days. Let's take a look at the S&P futures today. Gives you a sense on the futures. Taking a look at the ES here on the futures. Obviously, a couple pretty significant down days. What I was watching here a little bit was this uptrend line that's been broken here. Let's just talk about the indicators that I use. That gives you a little bit of an idea. We already talked about the 8 moving average, which is this little teal line. That's the exponential. The 21 exponential moving average. You've got the 50 standard moving average here in red. You've got the 200 up here in yellow. But the white dots are the PSAR, which is a reversal signal. So looking at that PSAR reversal signal, here it gives us a chance to figure out exactly where potentially we've got a reversal in momentum, reversal in direction. And then I've also got on here down below MACD here with RSI and stochastics, TTM Squeeze Pro here, as well as the stochastic momentum indicator and the CCI indicator. I use them all Doesn't mean I'm religious about them all, but if you are trading more individual stocks or looking for swings in the market, that's essentially what I'm looking for, are these different swing points, potentially, if there's a chance to put on a trade that's going to give me the best chance to be successful on something that's reversing. So ES, you can see on the squeeze, we have reversed off of these, lows on the squeeze down. Squeeze typically lasts about 8 days on average, can go longer. You can see it can hang longer and be extended out here as well. It can be extended to the upside. We started to reverse the momentum a bit on the squeeze. MACD had reversed, and now it's kind of heading back lower along with the RSI and stochastics. This stochastic momentum indicator is one of my more favorite indicators. When these things get oversold down here or overbought up in here, it's a good indicator that you've got a change potentially in direction. So you can see where we crossed down here, RSI and stochastics started heading lower. MACD went lower. That was a pretty good indication. You got these PSAR signal reversal there 2 days ago, telling you that right now we're low. And to me, even more telling is watching the 8 and the 21 moving averages. So you can see here that back on the 29th, that's really when the 8 crossed below the 21 EMA. And when that happens, we stay bearish until there's a reversal on that. Those can last anywhere from, a couple days to a couple weeks, month or more. So it gives you an idea of where we potentially may be on this. So right now, we're in a bearish mode. It's not a shock to anyone. If we pan out to the 1 year from these highs, you're still below this downtrend. And to me, right now, it's like dropping a basketball down a flight of stairs. I think that's what someone pointed out to me the other day, and that's exactly what it is. We are on a staircase that's heading down, and this basketball is going to bounce and bounce and bounce and bounce and bounce. And every time that basketball bounces, you get these little bear rallies, which can always be fairly strong, but you're remaining in a bearish downtrend. This is the regression channel here as well. So we hit the top of the channel, the bottom of the channel, the top of the channel, the bottom of the channel. We're right in the middle here. So my guess is we're heading down to the bottom of this channel, going to be somewhere around 3,600. Doesn't mean we're going to stop there, but I think that's where we're heading in the short term. So I think we had definitely lower on the indexes right now. So there's where we are in EX. Hopefully that explains a little bit about the indicators you're looking at as we look at some different things here. So again, the trade plan and what we do here, and we had a pretty good couple years. We were up 60% last year. We are up 47% this year so far trading in my account. So that's just me, not everybody else. So others may be doing better than that. And we just aim to be consistent and play the markets. And I'm pretty big on just trying to keep things simple. I don't want to stare at a screen all day. I don't have the time or the inclination. I'd rather be sitting on a beach, sitting on a boat, and just chilling out and not staring at a screen for 8 hours a day. So active, but not ridiculously active. I prefer to enjoy what we're doing. So I'll keep my strategy simple and just give you an overview. So there's where we are on the markets, again, with UVXY as a little bit of an indicator on this bearish move. ES heading down. Real quick, as we look at a couple other indexes briefly today, oil has been in this downtrend since the middle of June. No turn at this point yet. However, you can see from the CCI and the STOMO indicators here, it looks like potentially an oversold, at least a bounce for now. Let's see what happens in oil. I believe oil is heading higher. I think we're going back to the 120, 130 range in oil at some point over the next, over the next period of 6, 8, 10 months, something like that. I don't think we're going there tomorrow. But I think oil rebounds from here. All of the external pressures in Europe going to keep oil from getting too low. Gold has been just absolutely taken out to the woodshed and beaten up. So you can see gold just stair stepping down. If you thought gold was an inflation hedge, you'd be wrong. So if you fled to gold, thinking that the market's going down and this is a great inflation hedge, then you've probably lost, 20-30% of your gold purchase so far. So it's a good futures trade, a good swing trade for us. And then taking a quick look at bonds. Bonds are low. They're hitting new lows now as of today, another new low here during this period. Bonds are down, rates are up, bad for tech, tech goes down. Pretty simple stuff. I had a couple quick notes in here. The Fed's in control. They're steering this car. They're not going to, let up off the gas. They're going to drive us right off a cliff because they have no brakes. They have no clue what they're doing. So they're not going to let up. They're going to keep trying to choke this thing down to try to keep inflation in check. My guess is another 75 basis points. I don't really think that the 100 is going to happen next week, but I think the 75 is certainly going to be where they go. And you got that little outside chance of 100 if something else spooks them in the next couple of days, which you never know. And I think they're just going to keep raising, and they're going to drive this thing again, like I said, right off the cliff. They've got to also unwind a decade of stimulus into the market. Yeah, Igor. Yeah, they're going for 4% by 2023. Yeah, I think it's going to be damn close, 3.75, 4%. So the Fed's just going to keep raising. They're going to keep raising rates. They've kept rates at zero for way too long. They oversteered to begin with. Now they're oversteering on the other side. And like I said, they're going to take this economy and the country right off a cliff. I'm not trying to be political or anything else here. I'm just telling you, if you don't think this thing's going to get worse, you would be wrong. It's going to get worse. They've got a decade of unwinding to do. All of that stimulus is going to come pulling out of the market. Anything that's a rally here on this market is a bear market rally. There's nothing to indicate that we are done going down, and it would not. I think 3,000 is a level to keep an eye on. Could we see a 2 handle? Possibly. I don't think we're seeing 2,000, but I definitely think we're 3,000 is a very real possibility. I would keep that in check. Do I think we're going there tomorrow? No. If we continue to just stair step down like this, most of us trading, 112s and strangles and things like that, I think you're okay. You're having, you're fine, but you never know on it. If the Fed does something crazy, you never know what's going to happen here. I think earnings season is coming around the bend here. I don't think earnings are going to be horrific. I don't think they're going to be great, but I think the guidance is going to be poor, and I think that's going to be the start of the next major leg down on things. So anyway, I know that's a really cheery thing to think about, so I'll move off of that. Let's get to trades, which is what you want to take a look at anyway. The only reason I bring this stuff up is I think you got to be aware of your surroundings, and you got to be aware of where you think we're going. If you're going to be placing trades, you want to make sure that you're placing trades smart enough that your short strikes are not going to be hit. And yeah, Anish, yeah, perfect in there. Yeah, the very fact that VIX is not over, we mentioned this at the beginning, if the VIX is not over 30, people aren't worried about it right now. And I think that's it. I think the bear market it's just this, like I said, if you dropped a basketball down a flight of stairs, that's exactly what we're going to be doing for a while, and we're not at the bottom of the stairs yet. So every time that ball bounces, we get a little rally, then we go lower to the next step, bounces up, and I think it's just an orderly sell down there. So just be aware of it as you're selling your strikes, and don't get too cocky on these down moves that, hey, I can sell a little higher naked puts or something like that, depending on how far out in time that you like to go. All right, so that gives us a little sense of what we're looking at on the charts here, a little bit of what my indicators are. I don't want to get into Greeks too much today with you. I will tell you that my typical way that I'm managing Greeks is I want to keep my delta somewhere between $200 to $400 per $1,000 account that you're trading. So if you have a $100,000 account, I would prefer to keep my deltas under 400 plus or minus. I don't care if it's plus or minus. You just want to keep them in that range. If your deltas right now, if you have a $100,000 account and your deltas are somewhere in the $600, $700, $800, $900 range, it's too high positive. If you're negative, that it's probably paying off for you today, but I think that's a little too extreme on the downside. Being delta neutral, very difficult to do, but I think keeping your deltas under control. I also like to keep my theta somewhere around twice my delta. So I'm looking to keep my theta somewhere around twice my delta. Just so you know, today on my account, so we started this account at $30,000 3 years ago. It's at 300 or 230,000 today. We have not added to it, but it's a $230,000 account. But the deltas today are 757. So 757 delta right now on a $230,000 account. So I'm definitely inside of my range, and my theta is 1185 on that account. So I'm keeping my theta about twice my delta. That's where I like to be. I don't want to I don't want to go bananas on theta. I don't need to have theta 3 times my delta. I'm keeping my theta in that $400 to $800 range per 100,000. So at 1185 on a $230,000 for this trading account that we're running with right now, that we post everything from. Those are definitely in line. So I hope that gives you guys some insights of where your delta and theta should be, at least on my end of things. And so this is everything's SPY weighted. So hopefully that helps. So everything is SPY weighted for me. And then theta to Vega is like a 0.2 or more, which means 4 times Vega to theta. So I don't want my Vega to be more than 4 times my theta, and my Vega is underneath that. So I feel pretty good on where I am on that portfolio. So I hope that gives you some sense of where we are on some of the Greeks that we get into. And before I jump into the portfolio and some trades here, I just want to give you, as I peruse through stocks, I mean, you're looking at the markets right now. You've got, Walmart up, you've got Lucid up, and that's about it on my scans. But a couple of stocks that I thought today were interesting. I'm going to share a few with you if you're trading stocks at all. J&J, pretty interesting. You got a PSAR reversal, so that white dot's a PSAR reversal today. You've got the TTM squeeze coming off these lows, and you can see the momentum changing here. You can see the momentum changed back here on the MACD, heading higher. Stochastic momentum went from oversold. It triggered right here, which is about right where you would potentially look to get in, and it's heading higher. It's not overbought. CCI also triggered higher and moving higher. So it's a pretty interesting entry point on J&J right now. There's not a lot out there that I would tell you to trade, and I'm not a big individual stock or option trader, but that was one. The next one here is Disney. Disney looks like it's going to hell in a handbasket. So you can see it got a bearish PSAR reversal today, but you could see the momentum heading south on it. You can see the STOMO momentum heading south. CCI way overbought here, heading south on it. So Disney not looking too hot here, but this is a favorite 112 trade for a lot of people. I just took actually a little loss on a 112, but I've had several winners on it. 112 trades for me. I prefer ES. We'll do some other indexes and ETFs, but I'll also do a few stocks periodically that I like. NVIDIA being one, and I really like NVIDIA in this range. Now, obviously, we're in this bearish mode. The date is below the 21 EMA. It told you to get out right here. So we've been out of this thing, and you can see just everything selling down. here, but I think CCI was at a maximum oversold back here and starting to rise. That's a good indicator. MACD has already started to reverse, even though we've been slipping further here. So I think, and with Stomo being also in the oversold, doesn't mean this thing can't go down further from here, but I think if you wanted to nibble or consider an NVIDIA 112 in here, if you like it, if you're trading stocks and you want to enter something, I don't know how many people here are actually trading, stocks, options, whatever you're trading, but a 112 on NVIDIA potentially is an interesting spot to jump in. And that being said, let's take a quick look at what maybe that would look like here. So hopefully you can see my entire screen. If you can't, let me know. I'm going to share a little bit about my portfolio back here, but let's just take a quick NVIDIA look. And what could we do potentially on a 112 in NVIDIA, depending on where you think it is going to go and where you would want to own NVIDIA. I'd probably go out about 45 days. I'm going to start around this 20 delta and just put a 5 wide on for about $1.28. And then I'll probably go down here somewhere around 95, maybe sell 2 of those and take a quick look at what that thing looks like. So here's a 112 on NVIDIA right now. So buying power 2025 on this, you're going to make a, again, I'm not sold that this is the trade yet, but it'd be $105 return if we stay up in this tail and the things. And when the 111 trade that I originated came from something that we were doing in Income Navigator, where we were doing a lot of what we call the bear trap trades. And it's pretty much the same style trade as this. We started it with selling a credit spread and then, buying a credit spread, a call credit spread, and selling a put credit spread on it. Then we went to all puts, and then this thing kind of just evolved from that trade into the 111. Then I evolved into a 112, and now you got a million versions of it, which is fantastic. So all kinds of really cool stuff out there. 113s, 772s from AJ, and some of the things that he's doing. So all kinds of cool stuff. The calendar versions of it. There's all kinds of stuff that you can do on these. So there's no limit to what this bear trap style trade can look like here. 107 bucks. So if you're making $107 on 2025, it's a 5% return in 42 days. My trade plan is I'm looking for 3% a month as my minimum that I want to make. So my goal is to always make 3% a month every month. We exceed that typically in many months, but that's the minimum. That's what I'm looking for. If you can make 30 to 36% a year, you're doing pretty doggone well, and you're going to outperform almost every fund on planet Earth. So 3% is really where I target. I'm not targeting 5 or 10%. This is on portfolio, not per trade, which is why all of the people that were on those Facebook groups and selling the wheel, there are not too many posts anymore. They've all gotten destroyed because you can't expect that every trade is going to give you a 20% return in the bull market and never stop. So now it's a little bit more difficult. So I like to keep these things around 5 or 6% in the tail over 45 days or so, because it keeps me above my 3%. If we sell off and we get into the trap area here, you're making 605 on that. So now it's a 6x return on that. So now it's a 30% return in the trap. And then what would you do at the end here? My trade plan, there's a couple of different ways you can exit. One exit would be you close once you've hit the max profit as a loss. So here the max profit 605. One of the options is I simply close that thing for a $602 loss and be done. Another thing you can do is I can take assignment. Now, would you take assignment at 95 right now? It's selling for 128. 95 would be a significant discount. I think from an IRA standpoint, if you're trading stocks or what have you, I think it's a great trade for an IRA. I would potentially look at NVIDIA here. Owning NVIDIA at 95, not the worst thing in the world, even heading into a recession and even further to go on the market. 95 from here, which is what, 128, okay, is a 33% drop, which is somewhere around a 26% downside. I still think the market's got 20 to 25% down to go yet, because I think we're sitting at that close to 4,000. I think we can go to 3,000. I think 25% down from here, pretty reasonable. That's my piece. I'm going to share with you briefly the portfolio that I have, so you can see exactly what I'm trading. I did post this. I do post it periodically on both sites, both for the Income Navigator folks. They get it more regularly, and I posted it once in a while in Trader Nerds as well. But here's the here's what the portfolio looks like. It starts off with strangles. That's my bread and butter. I love the strangles, and here's the strangles throughout the this year so far. All winners. So it's been a nice income stream on these last month. 3 nice winners on strangles. So strangles doing really well. Number 2 is the ES 112s. Again, all winners all year, generating pretty nice steady cash flow. And then when you hit inside these traps in months that we have some significant volatility and drops, okay, that's all it takes is a couple of those to really juice your income. So it's been a consistent winner in up or down. June, when the markets were hitting lows, and we were still doing really well on those, and we had a couple expire in the trap, which was fantastic, and a couple expire just into the at the top of the trap, where we might have closed them a few days early. So you get a chance to see what that looks like. So strangles, number 1. 112 trades on ES is number 2 for me, and then spec trades make up really the rest of what I do. Were strangles my go-to trade when I first started with 30K in this account? Yes, strangles were still a critical piece of what I did. So strangles were, and then credit spreads were. I will also tell you, when I started, a lot of 0 DTE trades were pretty standard in this account, and I still do them, not to the extent that I did. Last year was not the best 0 DTE trades. And Jim, the percent of account invested is usually about 50%. And we'll talk about that in a bit. So you can see some spec trades. I still like strangles on futures. Captain D, Captain Jones, Dennis, what have you. He and I been trading together for a bit and bouncing a lot of ideas off each other. He's been an Income Navigator as well as here with his own channel and Trader Nerds. I think strangles on futures gives you the best chances, in my opinion, to utilize leverage. You just don't want to go bananas and over leverage yourself. But I said back in January, this would be the year of the strangle. It absolutely has been. Strangles have been just an outstanding trade all year long. But I will also put on some 112s in RTY or some of the other indexes that are out there. NASDAQ or NQ futures, I don't like them as much because the BP is pretty significant on 112 trades. So give you an idea of what that looks like. Let's jump into positions. Here's where we are. Obviously today we're down a tad, especially with stuff going on RTY. But let's look at a few of these trades. Today I've got 2 112s expiring worthless today. So these will be full 100% winners. Those will come off the board today. And then let's take a look at maybe one of these big ass 112 trades. So let's get into this. We'll jump into the curve.
Hey, Tom, there are a couple of questions. So Raj is asking, what was your total return this year in the last 2 years? And how much do you need to start an account? Is it 30,000 or more or less?
I would recommend at least 10,000 in an account. So we do in Income Navigator, we do run a $10,000 account that we are showing. So I'm up, this month 3% in that account. So again, $10,000 account, it's going to take you a while. You just slowly grow it. That's what my kids are using as a start. I started at 30. It grew to 60. Then it grew to where we are today. This year's return is 47%. Last year was 60%. So just so you know the returns that I had the last 2 years. Okay. So let's construct one of what we call the big ass or whatever 112 trades. So essentially what we do here is when placing this trade, I'm going to put one on. We'll put one on live here today. You're selling these for minimal to almost no credit. I want 50 wide. I'm going out as far as I can, and I don't really care if you have the BP to do this in your account. I think it's helpful. If you don't have the BP, this is not something you should be messing with because it's going to chew up your BP. And if you got span margin because you're trading futures, it's going to continue to compound on that as well with you. But take a look at here. It's a $50 winner. Okay, so we put this trade on for $1 back on 9/12 when we put this on. So we put this trade on just a few days ago, and you can see we're already in this in the trap. This trap goes all the way down here to 33.26. I think 3,600 is a really good spot coming up for a while. So I think that's the next target for me, and then maybe a bounce, either slightly before that or around that mark. And it's not a hedge because to me, a true hedge is not a credit spread. But I like to at least put one on almost every single week, and these have been paying off. So I get paid $50 to make 2,500. Okay, if I don't land in the trap, okay, I'm not out any money. I keep my $50. If not, I make 2,500 on a trade. So let's take a look at maybe constructing one of these here as we go. So I like to, I'm pretty close to 45 to 60 DTE on these. Let's see if we can put one on here. We have a bunch of things at this strike. Let's try to pick something that's slightly different. And I would ideally I want to be 50 wide because I want to max it out on it. So on these, I want to be somewhere around $10 wide. So that's pretty good. So this is the debit spread that I would want to put on. And then I'm going to sell something down here around 5 1/4 because I really don't care about the income. I just care about the trap here. So I like the safety. Let's just pick this one. 28.50 looks pretty good. Okay, so this would be a $1.50 credit. On it. So there's a good idea of what this trade would look like today if I was putting one on. I can't even fit the whole thing on the screen. So I'd make on a $1.25. I'm going to make, I'm going to get paid $50, $60 to get it. The size of and the length of this trap is gigantic. Okay, so I don't, can you make it wider and fatter and bigger? You can absolutely adjust to whatever it is you want to adjust for. If you want to put this on for a slight debit and pay $25 for the chance to get into here, that's fine too. Figure out, what works for you. But if you get paid 50 and you make, just the size of this trap. So the difference for me on this and some of the other trades is I'm more interested in the width versus the thickness of the trap. Now, the thickness is great, but in order to get this thing, fatter and thicker up here, I got to start to really move up my puts higher than I really want to. Do I think we're going to hit 3,200? Possibly. My goal is not income. My goal here is just, it's not a perfect hedge because a hedge is something you pay for, not something you take in credit for. However, I think that's a pretty good opportunity right there if I'm somewhere down in this area on it. So if I like this trade, This would be one that I would put on 28.50. So let's put it on. Throw it in there. Obviously, Tastyworks. Let's say 28.50. Put it in. I sold the naked put part. I'll wait to see if we get filled on the debit spread part while we're talking here today. So it gives you a sense of what that looks like on there. That's the, I call it, again, it's a big ass 112. The spread to me, it's a $10 debit. The naked puts are like $5.50. So I'm making a whole $1 credit for this gigantic size trap. And these have been paying off pretty well. It's like a 20,000% return when you make $2,500 on $50 credit or something. So they're pretty happy trades to put on and sit, as long as you have the BP ability to do that. So that gives you a sense of what that looks like on the 112, and then obviously the big ass 112. And I'm trading futures primarily, and I'm trying to trade in that $45 or 45 DTE range. I can go a little bit farther out. When you saw my trade plan, if you looked at my expirations, I have an expiration today on the 16th. I have an expiration next week on the 23rd. I have an expiration on the 30th, an expiration on the 7th, an expiration on the 14th of October, an expiration on the 21st of October, an expiration on the 28th of October, and an expiration on the 31st of October. So those are all 112 trades. I'm layering one on a week to come off every week because I need to generate that consistent income. So if I look, hopefully this is all making sense as I run through it all with you guys, and you're getting something of value out of it. So when I take a look at my trade plan, and I'm pretty strict on my trade plan, I'm not going to deviate too much. And when I do deviate, that's when I get whacked. So I will experiment stuff, but I don't try to get too out of it. And it does trade on a weekly basis. So in my IRAs, I'm always looking for like 1.5%. I'm just trying to make 18% a year in an IRA. I do trade futures in my IRA, and I trade 112s in my IRA, and I trade strangles in my IRA. Obviously, I don't have the same types of margin availability that you do in an IRA in your trading account. However, I'm conservative on it. I'm just plodding along with a smaller account. My trading account, I like that 3 to 4% monthly. That's what I'm shooting for, is that, somewhere in that neighborhood of 36 to 40%. It's been pretty consistent for me to do that every year. I have been trading since 1989. So longer than probably some of you have been alive, and probably less than some of you on here. So I've made a billion mistakes as well. My risk management, I'm never risking more than 2% of my portfolio on any trade size. I don't have any more than 35% of my total portfolio BP in any one strategy. I've got my own trade rules that I follow. I don't break those trade rules. We have a lot of really great traders that I trade with. I mean, get yourself into a group with people smarter than yourself, and you're going to be in good shape. If you're the smartest person in the room, you are in the wrong room. So I'm always trying to find a trade room or a trade place that I can find really smart people. I've found that on the Income Navigator side and the active trader side. And some of these trade rules I've borrowed from other people because they're fantastic. So I'd really try to be in these trades and keep it simple. I'm a simple guy. I think everything should be simple. If your trade is so complex that it takes you, that you're spending every day in front of your screen and you're watching it like a hawk and you're sweating, A, you're over trading, you have too much size in your portfolio, and your trades are just too doggone complex. While I do really like some of the other trades that I see from people, some of these calendarized 112s, I do like them. And I do like some of these trades. To me, though, trying to keep up with all of these strikes, especially in Tastyworks, which is the world's worst platform for tracking stock trading on planet Earth. TOS, much better tracking platform, so I can keep trades straight and analyze trades. But Tastyworks, I like the platform for trading. So that's what I use for trading is Tastyworks, but I have a TOS account for some of my other accounts. I've got 5 accounts in Tastyworks and 2 accounts in TOS. And Thinkorswim, much better charting, a lot of really great things. I like the trade platform in Tastyworks. It's just horrific for tracking trades. And the more trades you get on, especially if you're doing calendars and everything else, all of the dates are starting to mix up. You really got to be diligent and use that trade tracker that I was showing you earlier on there. So when this was written, the account was at 160 grand at the beginning of the year. So it's, like I said, it's 230 today. So we're up, but this is what the plan was, just so you can see how I plan it, and I keep an eye on what my BP usage is going to be. My max BP on this size account was going to be 120. My target is 50%. In fact, today it's at 60%. So I'm at 60% BP usage, little over my 50, but it's not out of control. And as the account grows, it gets a little more difficult, I think, or a little easier, I think, keeping track. Strangles, if I put 3 strangles on a month, and I'm hoping to get 1.5, maybe 2 to come in each month as I go. So when I'm looking at those strangles, typical strangle for me, when I close them at 50%, but I'm putting them on for about, I don't know, $1,200 to $1,300 in credit, and I take them off around $600-700. So if I can close 2 strangles a month, I'll hit $1,000. 112 trades, I try to have 1 expiring every week. If I make $700 a week and none of them ever expire in the trap, it's $2,800 right there. My BP usage on those should be around 36 grand. And then spec trades, other 112s, other strangles, other things I'm doing. Oh, just got filled on that big ass 112. So we'll post that and you guys can see what that looks like. If I can make another $1,000 on spec trades with other 112s and other strangles and some credit spreads and some 0 DTE trades, then I'm all fine. I'm not going to share my entire strategy here with you guys because I want to be fair to the Income Navigator folks, but here's my strategies. I understand what my sizing, my buying power is, where my trade entries should be, what I'm going to sell for a strangle. So I'm looking at 90 DTEs on my strangles. I'm looking at 6 delta puts, around 7 delta calls, roughly. I'm going to scatter them around at multiple strikes. I do not want to have 3 trades on at the same expiration at similar strikes. That means that just increasing your risk. And then I will close the year at a 50% winner, or on this particular strategy, it's a 4K stop loss, I should say. 4K loss, 4K stop loss on these, or I will close them out at 21 DTE. This is about as close to anything that Tastyworks shares that I am doing, except the fact that I'm selling premium. I don't use a lot of their other strategies. You can see I don't trade 45 DTE very often on most trades, but I will start around 45 to 60 on 112s, but strangles I'm out at 90. I feel they decay pretty well. Yeah, you can group in Tastyworks on the web platform, and I do that with my kids' accounts, but I don't like the web platform. I like the app that we were just in, and I think it's hard. I think it's hard to use that web platform. Igor, who runs the Mr. Top Tick service, is on here, and he posted in here. If you want to track your trades and you want to be able to analyze your trades properly, the best thing on planet Earth is Option Net Explorer. He's got a link there for you. Again, not trying to sell anything. If you want to track your own trades, 100%. If you're serious about trading and investing, go to Option Net Explorer and subscribe, and you can track your trades there. You can analyze your trades there. You can see what's going to happen on your trades if this or that, and that's really where you want to be. You can do some back testing there as well, but this gives you a sense of what this trade plan looks like. Here, as I go through some of the hedges that I may have on, how I play some of the 0 DTE stuff, broken wing butterflies, calendar trades, strangles on futures, all of those types of trades. So that gives you a sense of what that trading plan is going to look like overall. So hopefully that's helpful to you. You get a sense of that. But everything I do is extraordinarily rules-based, very mechanical based for the most part. There's no emotion in here. Similar to, I think what Bobby might do on his daily things where he's running through his spreadsheet. That's too much work for me. I don't want to be keying data into that big of a spreadsheet, having it, I just know what my plan is. I'm not saying you shouldn't do that. It's all great stuff. On it, everybody has a trade plan, hopefully. And if you don't, you need to build one. You can't just be willy-nilly following other people. If you try to do what everybody else is doing, you're going to get killed. You need to have your own plan. Just because I do a 1-1-2 trade in ES doesn't mean you should. You can do it in MES. Although MES I found very difficult to trade, but it's requirement for small accounts. I mean, if you're in that $10,000, $20,000 account, you're really going to have to $30,000 account. You're going to have to rely more on MES, which has limited strikes, harder to get fills at times, and it's just a little bit tougher. But you have to use it. But size according to your plan, size according to your account when you're on here. Don't just pick, somebody else is doing a trade and while that looks cool, I think I'll do one. Try it small, see if it works, and if it does, fantastic, and it fits your plan, then do it. If it doesn't fit your style, don't do it. Don't make someone else's trades your style. It would make no sense to just copy other people. And we do post alerts, and I do post all my trades live, as does Igor and Gabe and others there. And it's all good, but use those types. And even on, Trader Nerds here, as people are posting their trades, look at what they're doing, backward engineer it, see if you feel comfortable with it. And if it makes sense for you, add it to your plan and create your own plan. Just because somebody says, well, I set my stop here, doesn't mean you should. Okay. So make sure that you're, make sure that you're setting your plan for what makes sense for you and your trade style. Personally, I like to travel a bit. I head to the beach, I head to the boat, I do whatever. I don't want to sit at a screen, stare at a screen all day. I don't want to read thousands of charts. I don't want complex trades. I don't want to track things in a gigantic sheet that's going to, that requires me to spend an hour. I don't want to spend that much time. Okay. I want to place my trade. I want to move on. I placed that one trade today so far that we saw, and we're in and out. Maybe we can place one more today if it makes sense. If I'm looking at my trade strategies, we just placed a big ass 1-1-2 trade. Is there anything else to trade today? I don't know. I don't need any standard 1-1-2s. I'm already booked on those out to October 31 right now. I could put on something for November 11th. I guess it's a little bit farther out, so I have a little room there. What is this one? This is it's the one we just put on today, I think. Right, so this is the big ass version that we put on today. If I was going to place a 112 in this range, 112s for me, I use typically 30 wide. I'm around $6 on it. Although five, nothing wrong with $5 on it. I don't typically like to go. I'm going to do something slightly different today. Just look at a. Let's get a little. Do something a little bit different. Let's go with a slightly. I don't want to do that. I don't want to deviate from my ain't too much, but somewhere around $6 is $5-6 is fine. And then I typically like to sell right around the 10 delta call or delta puts here. I'm sorry, $10, not 10 delta. My bad. So if you're following along, this is pretty much what I'm doing. All right, so all right, so this might be a typical way that I would sell a 112 right now. So if I'm going to put this 112 on, I don't know why this thing wants to. I hate Tastyworks for a number of reasons. I just like the trade platform. I don't know why, if I'm placing one trade, that I need to see an analyze tab with every other trade that's on it. All right, so here, this would be the typical 112 style trade that I would be looking at around that $14-15 credit. I like a little bit higher credit right here because I think 3,100 is a good level after this big drop off here. So I don't need to go super deep. I like the 30 wide. Can you make it wider and have this big trap? Yeah, beautiful. Do whatever you do whatever you want to do. There's no right or wrong on this style of trades. There's a million versions of these trades that are on. So for this one, if I enter this trade right now, and I'm using ES, it's using about $6,000 in buying power to make $788 in the trap. Okay, so that's what 13%. So it's a 13% return in 49 days. Okay, does that, so 13 divided by 49 times 30 is going to give me a 7 or roughly an 8% return in 30 days. This 8% is, according to my trade plan, is 8% more than 3 or around 3. Yes. Can we go a little bit less credit, on it? We certainly can. If you want to grab a little bit less credit, I don't really want to here. I think I want to stick around this and go a little bit higher credit on it. The trap to me is just a bonus. I like the income. I know you can create higher incomes than this a variety of ways, mainly by pulling this put up. I could also, calendarize it a bit, which means instead of selling the same put, maybe I want to go out to 56 days. A week later, or maybe I want to go out, 2 weeks later on that same put and look at my credit now, right? So now you've got a really big credit. I can even drop this a tad. Let's go 30 to 3,000. All right. So if we sold it here and we did a calendar version. So if I did a calendar version of this where I sold these puts, now 49 days is probably a little far out for these. Because I'm putting the whole thing on in one, I don't think I would do it this way. But you could reduce it back down a bit to maybe 30. Oh, it's my killing quantity here. So if I, change the expiration dates on it, I can maybe get a little bit more credit and move around. So there's a lot of different ways you can do it. My preference though is I just like to keep them all at the same expiration. For the only reason is that's what I'm most comfortable doing. That's what that's why I feel most comfortable. I don't want to track all these different expirations. It's too much work. Doesn't mean you shouldn't. Doesn't mean you can't. Lots of people doing some really cool things out there. on it. So if I look at, is this the same thing I had on? November 11th. Oh yeah, we were going to do a little less. So like November 4th. So I'm going. All right. So let's just get one of these trades on and be done. And we'll wrap up this session today. If you are interested in one and you want to do that, you can actually go to their website. So Options Explorer. If you guys want to try it, I recommend it. It's the best trading tool for people that want to trade seriously out there. So if you really want to use that and make your first, again, not trying to sell you anything here. It's just a suggestion. If you have an interest in it, you can use, in fact, we just made one for you today. Hang on. All right, if you do go to it, there's a coupon code here for, King in caps. It'll give you $50 off the first month if you want to use that code. So if you want to try it, try it. It'll definitely enhance your trading, allow you to track your trades, especially if you're doing all these 112s and stuff on there. Again, it doesn't matter to me whether you use it or not. I'm just giving you that chance. I'm probably going to pop this trade on today. I'm out here about 49 days. I've got a 30 wide. I've got a 3100 naked put, two of them. I can get $16 in credit. It's going to give me a pretty nice little income. So we're going to place this trade as soon as we get off here, and I'll post it in both groups. So hopefully this was helpful to you guys today. Hopefully you got something out of it. You get a chance to see what I'm doing. Yep, Candy, appreciate it. So yes, if you have any questions, you're welcome to hit me in, either the Discord for Bobby's group or on Slack for the Mr. Top Tick Income Navigator group. Have a trade plan. Stick to your trade plan. Don't blindly follow everybody out there. Whether, I don't care if it's me, Igor, Captain Jones, Bobby, or anybody else. You can't just blindly follow. You got to come up with what works for you. Okay, what works for me is how I can trade while sitting on a beach, sucking down a cool drink or a beer, or sitting on a boat. Okay, for others, you want to be in the action 24/7, staring at screens, in and out of trades, knock yourself out, man. Nothing wrong with that either. Just find what works for you. Find trades that work for you. Stick to a plan. That's what's worked for me, is I stick to my plan and I don't change from there. So hopefully this has been helpful to everybody out there. We'll get a recording out. You can go back through it. You can chat me up in either one of the services. That's fine. I will do my best to answer questions. Sometimes they come a little too quickly to keep up, but I will do my best, and recommend you guys jump in both ends. And if you want to learn stuff, put yourself in a room with people smarter than you. Awesome. Enjoy a great rest of your day, everybody, and we'll talk to you in Discord or Slack. Thanks.